Portfolio Builder members, today we pulled in an $853 profit week over week, and we did it with in-the-money covered calls that really protected our assets. If you do the math in your head, 52 weeks a year, average about $1,000 a week. That's $52,000 of income per year, per $150,000 invested in the program, or a 30% return. And we're doing it with protection. We're not just swimming naked, as Buffett likes to say it. When the tide comes in, we will not be washed away. So we could have made a lot more if we were riding naked, but if the market had pulled back, we would have been completely protected down to our last strikes. And so if I do review last week's trades, we were protected on Microsoft to 123. It's currently at 127. Apple to 180. It's at 187. Facebook to 170. It's at 184. Intel 41, it's at 44. You can go down the list. The only one that came close was Comcast, and that's because we were playing that one a little riskier to generate a bigger profit, and we nailed it. We got it. This week, we're going to be a little more bullish on the banks and still protective on all of the tech companies with a little extra risk on Cisco. Cisco now has a pretty good advantage related to this 5G build-out. Which is going to continue to dominate headlines. So again, we could have took on more risk. We didn't. There was a lot of volatility over the week, and our portfolio was never in the red, not even for a second. So that's the benefit of the strategy. If you're new, the first step today will be to purchase 300 shares of Microsoft, 100 of Apple, Facebook, Intel, and Cisco, 200 of Comcast, 900 of Bank of America, and 500 of Wells Fargo. Now this will give you an allocation that's very similar to what the SPY ETF does for you. And what's important is the SPY funds automatically flow straight into these companies. That's why they are dominating the stock market and outperforming everyone. So if you were in last week's trades, cover them. You do that by buying to close. Now you're not going to get the exact prices I got, but that's okay. And if we end up paying more than we collected, that means the underlying asset has gone up. We can never lose money when the market goes up with the covered call strategy. Our only concern is if the market goes down. And by selling in the money covered calls, it makes a beautiful setup to generate profits if the market goes up, flat, or down. So if you're new to the program, you can skip step A and go to step B. The minute you purchase your stocks, you're going to want to sell to open, which is highlighted right here. The expiration date, 5/31. That's not this Friday, but next Friday. And you're going to be paying close attention to these strike prices. These are strikes where we can basically be wrong. We can be predicting the market may go flat or down, but if we're wrong, we still generate a great profit if the market goes higher. So the trades are 125 on Microsoft, 177.50 on Apple, 180 on Facebook, 43.50 on Intel. The most aggressive trade is this Cisco, which is right at the money with the 56, Comcast at 41, and then the banks are actually more aggressive than the Cisco trade, slightly above the money at 29.50 for Bank of America and 47 for Wells Fargo. Now remember, you can write one contract per 100 shares of each stock that you own. And so that again is 3 contracts for Microsoft, 1 for Apple, Facebook, Intel, Cisco, 2 for Comcast, 9 for Bank of America, and 5 for Wells Fargo. Now what if you have a little extra cash over 150K? Well, the platform will automatically help you calculate how many shares you should purchase based on your deposit. And if you do need help getting your spreadsheet set up and you're in the Diamond program or on the trial for the Diamond program, feel free to reply to this email and ask for help. We can hop on and help you fill out your spreadsheet and get you going. So that's something we're perfectly happy to do. Now I am looking to add a put option on the QQQ to help us protect our tech companies in case there's a more dramatic pullback. So we'll be looking to watch the VIX drift a little bit lower. I think there's enough automated funds flowing through the system right now to push stocks a little bit higher this week and push this VIX lower. Now, of course, this is all at the risk of this trade war escalating. But this can happen in slow motion. If you've noticed how the Chinese like to work, they basically just like to keep their mouth shut, ignore all the threats, and just try to keep going on with business as normal. So my expectation is that Trump will slowly but surely lose his patience and start to force their hand by putting more and more pressure on them. But again, these sort of Cold Wars don't happen overnight. They can last decades. So we have to be very careful not to jump on the short the market bandwagon and really play it smart. So when we own the best assets in the world that have the most fund flows, that are currently what appear to be the last safe place to invest capital, we can take advantage of that by selling the covered call. This gives us downside protection and income from week to week. And as you saw, if we get around $1,000 profit per 150K, that's a 30% annualized return with a huge safety net underneath our portfolio. So it works out really well. We do got a live webinar coming on in about an hour and a half. Hope you can join that. It's at 1 Eastern, Tuesday and Thursday. If you can't, don't worry. We will send out the replay. And again, if you need any help getting your diamond portfolio launched, please just reply back to support, and we will personally help you fill out your spreadsheet and get this all going. So that's a wrap for today's Trade Alert video. Our SPY program from Monday is doing very well with our recent trade. Looking for a double payday on that one. And don't forget, on Thursday we have our whale program. This is very similar to the diamond program, except that it's more ideal for $1 million plus portfolios. It's gotten rid of Comcast, Cisco, and Intel, and has put in the big hitters Amazon and Google. It also has a core position in the TLT. So anytime stocks are at a premium, we won't be playing with those in this portfolio. We'll be taking advantage of either the long treasury ETF, the TLT, or the short treasury TBT. Currently, this portfolio has been riding the TLT exclusively and is sitting on a nice 7% return with almost no volatility. The TLT represents the 20-year plus treasury market, and that still remains the safest place in the world to store capital. So this has been a 30-year bull market for bonds, and we're continuing to play that as the trade war continues to drive assets into treasuries, especially among the rich. Now, we're not just betting on the bond market going on forever. We're really taking advantage of the speculators who think that's going to continue to happen. And even if they're right, it doesn't matter. Our goal is to own a safe asset that has low volatility and then generate the income from the option market. So oftentimes speculators want things to happen overnight, and it takes much longer. So even when they're right, they got the timing wrong. And again, we have no risk to lose capital if they're right, because if the TLT travels higher, both our portfolio and the stock speculators' portfolio will rise in value. Now, once we do get a VIX spike around 30 to 40, that's when we'll rotate the whale club out of the TLT, take some big profits off the table, and purchase these core companies of America when the rest of the world is panicking. And with the VIX spiking, the amount of capital we can generate from selling the in-the-money covered call will be incredible. In fact, when a VIX spikes to 30 to 40, the average rent we make from a time like this, where volatility is low, can increase by a multiple of 5 to 10 times. So we'll be able to buy these assets and sell deep in the money covered calls for huge premiums to protect against further downside and then catch the next run up. So that's the plan. Tomorrow we will be covering the trade from Monday, which was the 287 strike, and we're heading right towards that price right now. The market has been very resilient, so we'll be able to get a double payday. Our underlying asset will appreciate, and most likely we'll get to keep some of that covered call. Thursday we will do the whale program, which is going to continue playing this TLT ride until the trade war is resolved, which may take a long, long time. And then again, next Tuesday, we will cover these positions and write new covered calls. So that's a wrap. Look forward to having you on our webinar today and producing our next trade alert tomorrow. So thanks for your time, and see you on live in a few minutes.